Good afternoon and welcome to Facebook's third quarter earnings conference call. Joining me today
is me. Hi, I'm Tim. So last week Facebook reported how much money it made between July and September of this year. As usual is a lot, and as usual Facebook had a call with investors and its top execs to talk about how much money it made and how it made the money. I'm weird, and even though I get paid to write about this stuff, last week I didn't have a chance to actually write about this, so in my free time I actually went through and listened to the call. So in a nod to Bill Simmons, who's my favorite sports writer, I wanted to do kind of like a retro diary of the earnings call, mainly the parts around Facebook's advertising business, because that's what I write about for my job. If you're not into hearing about how Facebook makes their money, totally cool, but you probably don't want to watch the rest of this video because it'll be boring to you.
And now I'd like to turn the call over to Mark.
Thanks, Deborah, and thanks everyone for joining us today. This was another good quarter, and we continue to grow the size and engagement of our community. 1.55 billion people now use Facebook every month, and more than 1 billion people use Facebook every day. On mobile, we continue to have a lot of momentum. 1.39 billion people now use Facebook on mobile devices, including more than 1 billion on Android.
Zuckerberg goes on to talk about Facebook's mission to save the world and all the stuff Facebook has been up to over the past 3 months to save the world. It includes things like profile videos, being able to use emojis instead of just like the like button, groups, 360-degree video, which is actually pretty cool, but world saving, I don't know. And then he talks about how Instagram, WhatsApp, Facebook Messenger have these massive user bases, which they do, so does Facebook. A lot of people use Facebook or something that Facebook owns. Cool. Then he talks about future stuff like Facebook's virtual reality business, Oculus VR, Facebook's mission to get everyone in the world connected to the internet, internet.org. Again, cool. But I'm mainly interested in the money stuff.
And now I'm going to hand it off to Cheryl.
Thanks, Mark, and hi, everyone. We had an excellent third quarter. Results were strong across the board. Ad revenue grew 45% year over year, or 57% on a constant currency basis. Mobile ad revenue was $3.4 billion and grew 73% year over year. Mobile now makes up 78% of our total advertising revenue.
3 years ago, Facebook had 0 mobile revenue, so that stat's still crazy to me. She goes on to cherry pick a couple examples of how brands love Facebook. Cool.
Now here's Dave.
His stuff is super numbers heavy, very wonky. I even get bored during it, but there are a couple of numbers that I'm really interested to hear about.
Turning now to our overall price volume metrics.
Those were the numbers that I was waiting for. He uses the term price and volume, but what he really means is how much money Facebook makes from an advertiser per ad, and then how many ads Facebook shows to people. These numbers are the basic math behind Facebook's ad revenue, and they've been on this crazy trend over the past couple of years, since about the second quarter of 2013. Just check out this chart, you'll see what I'm talking about. Over the past 2 years, Facebook has been getting advertisers to pay more and more money per ad for fewer ads. It's supply and demand. I mean, advertisers are so high on Facebook's supply that Facebook can demand even more money from them. It's happening for 2 main reasons. First, more people are using Facebook on their phones, and on the phone, you only see ads in the newsfeed as opposed to when you check the desktop site. If you ever check the desktop site, the ads on like the right side of the newsfeed. The ads in the newsfeed are a lot more expensive than the ones on the right side. So Facebook's able to make more money per ad on average. The second reason, Facebook has changed those ads that are on the right side so that there's fewer of them and they're bigger. That also, boosts the price. These factors have really had an impact on Facebook's price and volume trends over the past year in particular. Again, look at the chart. But notice that the pricing trend has started to drop a little bit back to earth while volume has kind of leveled off. I'm really curious if that trend continued in the third quarter of this year. Let's see.
In Q3, the average price per ad increased 61%, while total ad impressions declined 10% on a year-over-year basis.
Okay, so looks like the trend is fading fast. Just look at how much things have changed from the second quarter of this year to the third quarter. Here, second, third, second, third. All right, now Facebook CFO Dave Winner is going to explain why this trend is going on.
These factors will have a less significant impact on the reported price volume metrics going forward, now that a full year has elapsed since the redesign of right-hand column ads, and now that mobile impressions have grown to become the majority of impressions. In fact, the quarter-over-quarter trends already point to that. In Q3, total ad impressions increased 7% sequentially, and average price per ad increased 5%.
Translation: Facebook is becoming more reliant on running more ads in order to rake in more advertising revenue.
And over time, ad load has been one of the factors driving year-over-year growth. It's just worth noting that it is up significantly from where we were 2 years ago.
All right, so next come the questions from Wall Street analysts and investors. Instagram was a popular topic. It usually is, especially since its ad business has really started to take off in the past year. But Facebook usually keeps pretty mum on the topic. That didn't really change here, except for one super interesting part, but I'll get to that in a bit. Quick summary of the more interesting parts that relate to the media, entertainment, and the advertising industries. One, Facebook is probably going to roll out a video app. That's been rumored for a while, but Facebook CEO Mark Zuckerberg came really close to confirming it.
A public sharing and consumption product for video, that's a thing.
Okay, number two. Instead of media and entertainment companies taking full-length shows and movies and putting them on Facebook just like they do on Netflix and Hulu, maybe they should start thinking about ways to chop them up into more bite-sized pieces. At least that's what Facebook CEO Mark Zuckerberg seems to want them to do.
The more interesting question is not in the near term what we're going to do to develop ways to consume long-form content, but what traditional media and content producers who have traditionally produced long-form content are going to do to chunk their stuff up better so that way it can be more easily consumed by this big community online.
And number three, Facebook seems to have figured out how it wants to take on Google when it comes to search. It's not about trying to catch up to Google and do exactly what Google did, which is index the web. Facebook is the web, so really all Facebook has to do is index itself, or at least the posts that people share on Facebook.
It's people finding posts that their friends or others had posted a news feed that they saw, but then might want to go check out later. And I think this is going to be a very important part of the video experience as well.
Okay, and now for that really interesting bit about Instagram that I teased earlier.
What we see in the short run is that some of the spend on Instagram is incremental to Facebook and some isn't. Some clients are comfortable with Instagram and bringing a new budget to bear. Some clients are shifting some of their Facebook budget.
So as much as Instagram is bringing in new money to Facebook and probably taking away money from TV networks, print newspapers and magazines, probably online publishers that could include Facebook's biggest rivals like Google, Yahoo, AOL, Twitter. Instagram also seems to be stealing money from Facebook. All that money ends up going to Facebook Inc. anyway, so not necessarily a huge loss, but it means Instagram isn't only growing the pie, but also taking some of Facebook's slice. That's not necessarily a horrible thing. It's not really that surprising. Brands' budgets aren't infinite, and some brands, Instagram might be more attractive than Facebook, but it's not something that you want going on for the long run, especially if you're a company that wants to make as much money as possible, which Facebook is very much in that category. For companies like that, the ad business is like a poker game. You win by taking everyone else's chips.
We believe if you look at the consumer metrics of where people were spending their time, we will be able to gain share compared to almost anything else you can buy out there.
That's the mic drop. We reach more than 1 billion people every day. Billion with a B.